Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the companies that I've been extremely excited about over the last 6 months or so is Peloton. And the reason is that this is a fascinating business model change that CEO Barry McCarthy is actually putting into place, going from a vertically integrated company that makes bikes, sells software, and then wants to tie those two things together to a horizontal services company. It's a horizontal fitness company. They're now making fitness videos that you can access on a smartphone. It can take you anywhere, that you can take on a run. They can take boxing classes. It's not just a bike company. So a lot has changed over the last year or so. But from an investment perspective, Peloton stock continues to drop like a rock. So the question is the company in trouble? Is the strategy not going well? Or is the market just overlooking the opportunity here? I think there may be a little bit of both going on. So I want to dig into the most recent numbers and tell what I'm looking for over the next year or two, because this is going to be a long-term turnaround plan. It's not going to happen in 1 or 2 quarters. So got to look at what we're looking for over the next few quarters and couple of years. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you want more on Peloton specifically, I have a deep dive in the show notes to my newsletter, Asymmetric Investing, and a deep dive I did on Peloton. So check that out. Let's go to the numbers and just get a high level look at what happened last quarter. This is the financial summary, and Peloton's on a little bit of a different financial year. So the most recent quarter was Q4 fiscal year 2023. That's the numbers that we're going to be looking at, is right over here. You can see that total members was 6.5 million, down 2% quarter over quarter and 5% year over year. Connected fitness subscriptions, this is the high-end subscription that Peloton sells, 3.07 million subscriptions. Now remember, this was less than 1 million subscribers as the pandemic started. So the company's come a very long way over that period of time. But that number was up 4% year over year and down 1% quarter over quarter. Now management did say after the fiscal third quarter that this was likely to be a weak quarter. The obvious reason for that is it's nice outside in most of the areas that Peloton sells its products. So people are just generally going to cancel. There was also a recall of the seat post on some of the Peloton bikes. So that was a drag on the number of subscriptions. There was a lot of talk on that on the conference call, but I think just generally that's kind of one of those negative PR things. Maybe if people were on the fence and you have this bike that you're not technically supposed to use, may just be time to cancel a service like that. So not a big surprise that subscriptions were down a little bit, but maybe a little bit bigger than investors were hoping for. The other thing that we don't have a lot of detail on is the new app launch, which happened during the fiscal fourth quarter. Remember, I said that Peloton is leaning into the fact that it's going to be a horizontal services company. So now it has 3 tiers for its app, including a free tier. But this is primarily related to the old app subscriptions. So 828,000, down 3% quarter over quarter and 16% year over year. But we're not seeing the impact of this new strategy yet. That's what makes this a little bit difficult to look at just from this app standpoint. They're going to change how they report things a little bit in the future. So look for a little bit more clarity on that as we go forward. From a financial perspective, what I want to highlight is the subscription revenue number up 10% year over year, down 1% quarter over quarter. But that keeps going up steadily over time. And the reason that you want to see that is subscriptions is where Peloton makes most of its money. 67% gross margin for subscriptions. Subscription profit, $2 million. So really solid numbers on the subscription side. And that's what you want to see growing. That's why they're leaning into the app and really de-emphasizing the product side of the business. On the product side, that's this number right here, $220.4 million worth of revenue, down 32% quarter over quarter. And there was a loss of $82.6 million. That is primarily because of those seat post costs and then also some write-downs for the guide, which is another physical product that they make. I don't think that's been particularly successful. So add those two together, you get $201 million of gross profit. That is not enough to cover operating expenses of $426.8 million. These operating expenses do include some stock-based compensation, so not all cash costs. But I want to highlight the trajectory here. Operating costs are down 64% year over year and 20% quarter over quarter. So management is clearly doing a lot to cut the operating costs and try to get the company to a more sustainable level from a spending standpoint, that's absolutely the right thing to do. Now, what we need to see beyond maybe just even for some further cuts on the operating side, we need to see this gross profit number, both on the subscription side and on the overall gross profit number. We need to see that go up and start to be higher than total operating expenses, because that's how you get to positive free cash flow, which they're not at right now. I wanted to highlight one thing from the release because I think this is important to think about when we look at the new app strategy. Is, are people actually interested in downloading the app and actually using it? And we're starting to see some evidence there. We don't have a lot of context for what these numbers mean and how it's going to impact the company's financials. But management says here, since relaunching on May 23rd, we've seen more than 900,000 app downloads, over 600,000 of which were non-Peloton members. And they've seen a higher mix of customers choosing the $24 a month plan versus the $12.99 a month plan. Like I said, there's also a free tier where you can access a handful of classes in a couple of different modalities. But the high end one gives you, I think it's 18 different styles of workouts. And then there's hundreds of workouts within each of those. So things like biking and running, which Peloton has been known for, but also boxing, yoga, meditation, all kinds of different things that you can do in this app now. So very different model. And the challenge is going to be transitioning people from thinking about Peloton as a bike with an iPad attached to it to just an app that you're accessing on a phone or a tablet. There were also 256,000 free monthly active users. That's going to be the top of the funnel for Peloton. That's going to be how they grow long term. Now you want to take a percentage of those and turn them into paying members and try to keep that number growing over time. So that's the way to think about the business. Now, the market obviously wasn't happy with Peloton's results, and there was a number of reasons for that. Revenue was not quite what investors were hoping. The loss of subscribers was a little bit concerning, especially after that post recall. The company did not get to positive free cash flow without adjusting for a whole bunch of different items. So the reaction of the market was just to sell off the stock. But the question is this strategy working, or is it going to work? And the reality is we don't know the answer to that yet. We probably won't know for about another year. Management said a lot on the conference call that they're trying a whole bunch of different things in growing this app, everything from pricing to who are the partnerships going to be. They announced a deal for college students and K through 12 teachers and administrators. So trying to get access into more people's hands, especially at that younger age group and people that maybe are more active in fitness right now, try to get them to be Peloton members early and then grow them over the long and then grow with them over their life. I think that's a phenomenal strategy, but that's the kind of strategy that may not actually pay dividends for 5, 10, 20 years. So again, Peloton is really playing a long game, and investors seem to be thinking about this stock short term. I still think that Peloton is taking the right strategy. I hope we see more partnerships, more people come into that top of the funnel, more people start to pay even something, even if it's the discounted $6.99 price for the app. Remember the app and the subscription business is extremely high margin. So you want to have as many customers as possible, even if they're not paying your highest price tier, because once you film one of these classes, you can deliver it for effectively zero marginal cost to each one of these new customers. So that's absolutely the right strategy, but it's going to take time for this to play out. It's going to take time to go from launching a brand new app to having hundreds of thousands, even millions of subscribers in that app. I think Peloton can get there. I think it's taking the right strategy. But the market isn't patient enough right now to let that play out. So that's why I'm holding on to the stock, interested in buying more over the next few weeks. But I'm also going to be monitoring this closely over the next few quarters as we get a little bit more data about how the app is going. But what do you think about the quarter from Peloton? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing here on YouTube. Thanks for watching, everybody. See you here next time.